Hello and welcome to the African Tech Roundup, episode 49 for the week ending Monday, March 21st, 2016. Yep, this is where we round up the week's most important tech, digital, and innovation news from across the African continent. My name is Andile Masugu. The homie Tefo Mohapi is away this week, but joining me on the show is a special guest and friend of the show, Zimbabwean tech entrepreneur and researcher, Nzwisisa Chidembo. How's it, Nzwi?
I'm well, Andile. How you doing?
I'm dope, man. I'm dope. Hey, I'm seeing your moves on LinkedIn. I see you're into a new role at Digital Planet. Tell me about that.
All right. So Digital Planet is one of the leading e-commerce solution providers in South Africa. They provide end-to-end solutions. So basically, they build and run your website. They provide fulfillment, which is delivering the products, strategic channels that's sourcing the products, and warranty, taking care of the customer once they've actually taken ownership of that product. So as a business analyst, I basically make sure that the stakeholders, the processes, as well as the technology are aligned so as to deliver on the overall organizational goal.
And so you'd be servicing a lot of South Africa's blue chip companies in this regard?
Yes, that's right. Most of the banks are serviced by us.
Well, big up to you. We'll be talking a little more about the research you're doing. I know you're studying with the University of Pretoria. You've got entrepreneurial interest in Zimbabwe. We'll pick up on some of those things as we go along with the show. We missed you, though, at the Nest VC What's Next FinTech event last week. I know you really wanted to come on and couldn't. It was right down your alley. Pity, though.
No, that's right. Next time, I'm definitely going to be there.
For sure. And while I'm at that, I might as well just give a quick shout out to the good folks at Nest VC. Well done to Aaron Fu and Muthuri Kanyami and the rest of the Nest Africa team for putting it all together. A big thank you, of course, to Standard Bank, Jayshree Naidu and her team at the Standard Bank Incubator in Joburg. A big thank you to My Phone, of course, the irrepressible Alpesh Patel and his team for their support. And, of course, thanks to the teams at iAfrican and the African Tech Roundup as well. Of course, if you didn't make it out, good news is we'll be unpacking some of the insights we gleaned from the show in this very episode, so stick around. Of course, a big thank you to Joburg for coming out and making the event super special. Nzwi, I totally expect you to factor your opinion on everything we play out today. Ready?
I'm sure. Cool.
Great. Fantastic. Otherwise, listen, if you're listening in for the first time, welcome to the show. Head on over to africantechroundup.com to catch up on all our previous episodes. To the usual suspects, thank you for being here. We love that you join us every week. Of course, you can also follow us on Twitter and Instagram for useful news updates and always highly opinionated commentary. Our handle on both platforms is at African Roundup. On Facebook, you'll find us at facebook.com/African Tech Roundup. But before we get on with the show, this episode of the African Tech Roundup is brought to you by Audible. You can get a free audiobook download and a 30-day free trial at audibletrial.com/African Tech with over 180,000 titles to choose from for your iPhone, Android, or MP3 player. So go ahead and sign up and listen to a brilliant John Carney piece taken from the Wall Street Journal called FinTech Party May Attract Crashes. Just click through to audibletrial.com/African Tech for your free audiobook. I'll get straight into the news for this week. First up, an American criminal named Perrin Vidal-Clark has left a leading development school in Kenya holding a baby. This is a ridiculous story, right?
No, it's pretty sad, Andile. I mean, we find someone trying to make a difference and we find someone else coming through to take advantage. It's very sad.
Now, in 2013, Martha Chumo, who was then only 19 years old, founded the development school in Nairobi and was making an incredible difference across Silicon Savannah. A gentleman named Perrin Clark came onto the scene and took up the reins as the CEO of the organization, only he wasn't what he seemed.
Yeah, it seemed he had a suspicious past and no one picked up on it, which is pretty sad.
It's unfortunate. So, of course, Martha being the chairperson of this organization, a number of high-profile advisors advise the development school, but allegations of embezzlement, burglary, corruption in general have come to the fore. Perrin Vidal-Clark, it turns out, has a pretty shocking criminal record from the United States of America. And has left this development school on its knees. A big shout out to iAfrican.com. Of course, my mates and co-hosts on the show here, Tefo Mohapi, leading the charge in terms of breaking the story on the continent. What do we learn from this, do you think, Nzwi?
It's always important to do your research. And I think one thing that we pick out is the difference between a board of directors and a board of advisors. Advisors can only function with the information that they're actually furnished with, whereas directors put in policies so that something like this doesn't actually take place in an organization.
Also, I'm sure there's a huge difference in the legal obligation of a director of a company versus, say, an advisor to a nonprofit. In this case, some very high-profile names being listed here: Eric Hirschman, Shiko Gitao, Josiah Mugambi, Jessica Kolako, and I'm not mentioning them to sort of implicate them in this matter, but like you say, there's probably only so much they could do as advisors. So maybe it also speaks to the kind of structure that needed to be in place for an organization like this to ensure its safety.
Yeah, that's right. And I mean, we also have to make note that I'm sure all these guys were doing it in good faith, and they never expected someone to actually come in and take advantage of them when they were making such a big difference in their community.
It also says something about how readily we are to accept help from outside. Unvetted help from outside, when whether it's in investors or potential leaders for our organizations. It almost feels as though if someone's from the outside, from across the seas, we give them a benefit of the doubt that we might not give a local, which is sad.
Yeah, that's true. So I think one thing that we learned here is, even though we get excited about someone joining who might benefit an organization or a new project, it's always important to do your background checks.
For sure. For ongoing updates to the story, be sure to follow iAfrican on Twitter at iAfrican. And the hashtag KOT is popping. And of course, people factoring in their opinion. A lot of upset Kenyans out there, and for good reason. I have a feeling, though, that the development school will survive this, and all the best to them. Moving to Nigeria now, where African smartphone maker MyPhone is celebrating an interim injunction served by a Nigerian court. It prevents MyPhone's Chinese competitor Xiaomi from selling phones branded Mi, that's M-I. And we actually caught up with the MyPhone CEO, Alpesh Patel, this past week, and this is what he had to say about the new developments around that legal bid. Take a listen.
Interesting story. We have our brand registered for 7 years. Last week, we won the interim court injunction against Xiaomi in Nigeria. The notices are going out this week. Anyone selling any product that is labeled MI in Nigeria that has not been supplied by us has to remove their products from the shelf. That is a fantastic interim victory for a small African brand that has followed the due course of law by registering their brands and their trademarks from 7 years ago. We are in a court case with them in South Africa and in Kenya. And you know what? The truth will always prevail. I have to protect what I built. I'm not saying that I've built something substantial, but at the end of the day, I just don't want the African consumer, because today there's more MyPhones in Africa than there is Xiaomi. I don't want a customer who buys a Xiaomi to go into my service center and say, can you please fix this phone? Because they have the same MI brand. I don't mind competition. If Xiaomi comes with an X1 phone, no problem. But you come with an MI, you're going to face challenges.
Definitely a big win for Alpesh and his team. What do you reckon?
Yeah, it's definitely a big win. If you look at Xiaoming, that's a major label. If you go in China, you will find it all over the place, and they have substantial financial backing. So this is definitely a big win for them.
Do you think it's an honest mistake on the part of Xiaomi, huge organization, or do you think this was a very calculated move into the African market, knowing full well that MyPhone is relatively dominant in an area that they're only entering? What do you think? What do you reckon?
I would think that Xiaoming, being the big company it is, they would have definitely done their background. So background checks. Because of their financial backing, they would have just said, hey, let's go for it. Then whatever the results, will face them along the line. Yeah.
And this past week, of course, this injunction was published in newspapers all over Nigeria. The products are being pulled from the shelves left, right, and center. I think this is also a win for African law in general, and I don't want to lump a whole continent into one, but I think there's a perception in the developed world that developing markets like ours on the continent aren't serious about law, ideas, trademarks, copyright, is not enforceable or protectable on the continent. This shows quite clearly that we're not messing around.
Yeah, no, definitely that's true. I mean, we have problems in terms of corruption in our continent, but seeing this happening to a small African manufacturer, it's amazing that they're able to actually protect their turf against a major player like Xiaomi. It's very encouraging for us.
Also an object lesson for startup founders all over the continent that, listen, guys, dot your I's and cross your T's. If there's anything I learned from my chat with Alpesh this past week is that it's not about the size of your idea. It's about how well you execute it, and it's about how well you anticipate some of the problems that will arise in the future and make provision for them now.
Yes, so let's use those law instruments that are actually there for us, such as trademarks and patents, to protect what's ours.
It's also something you mentioned in your comment last week when we were talking about the Vodacom situation. The latest person to sort of take Vodacom to court over, quote unquote, stealing an idea. Perhaps this is the precise sort of approach that company should have taken. Perhaps this would have prevented the situation where we see them accuse Vodacom of basically stealing their idea.
Yeah, definitely, that's true. I mean, you have a leg to stand upon when you actually have your patent and your trademark. If you have that, then let the law take its course, whoever you're facing.
Ain't nothing personal. Now, I cornered Alpesh Patel at What's Next FinTech this past week, and of course, I could not resist but ask him about that MyPhone Uber partnership that we covered some weeks back. Now, of course, we panned it slightly. We just called PR on the matter. But here's Alpesh telling us why it's, in fact, quite an exciting development. Take a listen to this.
Most of the guys that buy MyPhones, they're first-time users of smartphones. And we want them to download the Uber for the first time. And every first-time user that uses the code MyAfrica gets up to $10 off in various currencies off their first taxi ride. So imagine if I have a $50 smartphone and my competition has a $50 smartphone, but I'm giving you a free ride, or not a free ride, but a ride with up to $10 discount. I'm actually selling you that phone for $40, but I'm not dropping my price. That's what you call value.
Okay.
It's a one-time discount that the user gets for using Uber first time. But I think it's just a nice way for Uber to capture that first-time customer, to experience Uber's services. But also it gives us the benefit of being able to differentiate ourselves, not because of price, because someone would always beat us on price. The Chinese are all over the place. But differentiating ourselves by affiliating with really cool brands, but also giving value to the guy who buys our smartphone.
But also a cool brand that people actually want to use and will actually add value to their lives, which I think is the frustration with a lot of us who buy smartphones these days. You've preloaded apps you'll never use, don't really want, can't remove.
All right. And that's why you watch out in the next 2 months. We're launching a very good app portal called My Black. It's going to be called My Black because it's the black youth lifestyle of Africa. And it's going to be an amazing new app that's coming out. You're going to just watch out for it.
You need to have, tech broadcasters on that platform, man. You know where to look, though, eh?
I don't have to look anywhere. I'm looking at you.
You have it on tape, too.
All right. No problem.
Well, as we spoke about when we first covered the partnership, of course, some onboarding benefits for Uber, some reputational benefits for MyPhone. And of course, the one thing we didn't mention the last time is the fact that when you do buy a MyPhone device, it has the Uber app on it. And when you do sign up, you get a discount. That's quite interesting. Of course, it's a once-off discount. But all in all, a pretty decent partnership, a useful app on your phone. It isn't like Flipboard or one of those annoying apps that you can't remove on your Samsung device or something like that. So yeah, big up to them, yeah?
No, big up to them. I mean, it's wonderful to see when an international brand like Uber works with a local brand like MyPhone. So that gives a lift to everyone out there who's actually rolling out something locally, that it is possible to partner up with major brands outside.
Well, this next story should be interesting to you. Being the researcher you are, Ngwisisa, our listeners might not know, but of course Ngwisisa is working on his doctorate, focusing on mobile payments with the University of Pretoria. However, a new academic paper published in Nature Photonics by some South African and Italian researchers now unpacks findings around an exciting new type of laser that will hopefully be used in optical communication, laser machining, and even medical applications. How excited should we be at being the researcher, and the long timelines between discovering something exciting, finding a trend in data, and an actual applied technology based on that research? Like, how excited should we be about an announcement like this?
It's good to definitely be excited about it. However, we need to understand that in research, you start off at a theoretical level, then you work on that theory. So to actually see it in action, we are looking at a substantial time frame. So we should be excited. It's a wonderful win for us. to be producing such quality work on an international level. But it usually takes time when it comes to rolling it out in the commercial space.
Well, yeah, so congratulations to the folks at Wits University. Andrew Forbes of Wits University came up with the idea. He led the collaboration with the University of Naples, and of course, the key experiments were performed by Daryl Naidu of the CSIR. I'm heartened by the participation of the CSIR, which of course is a government-run institution, a parastatal as we call it here in South Africa, usually criticized for not being as useful a resource in the aid of developing innovation and contributing to technological advancement. But in this case, showing that government does have a role to play in pushing technology and innovation forward.
Yeah, definitely. I mean, people need to remember that this is also a channel for development and for innovation. And wherever funds are availed for innovation, it is a win for the government. It's a win for us who are in the country. Yeah.
I suppose people tend to oversimplify how long it takes for, say, an institution like the CSR to develop technologies around, say, desalination and providing water for all, that kind of thing. But I mean, again, hat to the CSIR for being involved in this project, and we look out for some of the industrial, perhaps even commercial applications of this laser, perhaps license agreements, looking to the likes of perhaps Siemens or Samsung or some large corporate like that to apply it into the medical field, the optical communication field, laser machining would. I'm looking forward to that. And give us a shout, the folks at WITS, the folks at CSIR, as soon as you guys have something like that really concrete, we want to be the first to know. Now, staying with South Africa, internet micro-jobbing service Money4Jam, also known as M4Jam, has reportedly ceased operations after failing to report a profit. Strange, given how, I think some time ago, I remember reading in a leading publication, industry publication, that their CEO at the time claimed they were profitable from day one. So I suppose this is sad, given how M4Jam is largely considered one of the up-and-coming innovative startups to watch and that kind of thing. Every time you have a conversation with people from the startup scene and they try and pull out an example of a good example of a startup to watch, M4Jam comes up, and unfortunately, it's tough, eh?
Yeah, but we have to remember that it's part of life. If you start something, there's always an opportunity for it to fail. But what's important is that you keep on going, regardless on what happens in the past. So it was a great idea. It didn't work out, but I'm sure they learned their lessons.
Look, I was always concerned with the model, given how they launched on the instant messaging service WeChat, and the idea was great. I think the reliance on a platform they don't control, i.e. WeChat, was problematic. So the idea is, as a user, you could perform, quote unquote, a micro job. You could earn money doing that. And of course, every time you completed that job, they would charge you a license fee, and they'd make money that way. They claim to have 70,000 users. And we've asked the question on this show, what sort of traction in terms of user onboarding in the African context, that is, would render a startup like this viable?
Wow, that's an interesting question, Andile. I think it's always interesting to note when it comes to these stats. Sometimes it might be just a registration, and it's not an active user. So I think the value is on the active, regular users instead of the people who have just registered and are dormant on the platform.
That's an excellent point. Even going back to what we were talking about earlier with the MyPhone and Uber partnership, it's one thing to have the app preloaded. It's quite another for someone to actually register, and quite another for someone to use the app on a regular basis, in which case with an Uber, I imagine the pressure for that partnership to deliver value wouldn't be as high as, say, M4Jam's need for someone who signs up with their service to actually become an active user. And clearly not enough active users, if anything that's going on right now is anything to go by. Look, this is particularly alarming given how they've had some big names sort of vote towards their success. Naspers and Tencent apparently invested in this venture, and I think it also just goes to show that just because VC interests show interest in you and perhaps even provide you money, it doesn't guarantee success.
It's a long and difficult journey to actually run a successful startup and to see it through the growth stages.
So the board's decided to cease trading and sell the assets to people who might be interested. I'm not sure what those assets might look like, given the model they run. They have said that there is a possibility that they could access further resources, extend their runway. I can't imagine if the model hasn't delivered value so far, that might be the case. I fully expect them not to recover from this. I do expect a lot of the learnings, like you say, a lot of the really smart, intelligent people that have been involved to filter to other organizations and perhaps use what they've learned to make it work there. I want to ask you, in the context of you being an entrepreneur, I know you have business interests in Zimbabwe. You're quite intimately involved with the startup scene there. What do you take away from that in the context of growing startups on the continent?
It's a process. People fail every day, but it's important to always get up. So as you're going along, you're learning your lessons, you have several ideas, you try roll them out. Not all of them are going to be successful, but one of them one day will be successful. So it's all about being dedicated to the dream of actually running a successful startup at the end of the day.
And how do you know when to call it quits? I mean, it's clear that there was, a board sat and decided, guys, enough now. And by the way, if you're wondering what's going to happen to all the outstanding jobs, if you've subscribed to this service, they've basically asked everyone to cash out before the end of March. Cash out any outstanding jobs that you have with them. And of course, if you posted a job on their site, they have promised refunds to you as well. When do you know when to call it quits?
Well, personally, it's when there's little or no interest from the customer side. Because at the end of the day, businesses are there to actually make money and provide a service. So when you see that there's little interest or no interest, I usually call it quits.
I suppose the admission here is this is likely more a cash flow problem and not a profit problem, i.e. not sufficient buy-in for this idea. Let's call it quits.
Yeah, I totally agree.
Oh, well, listen, our last story this week comes out of Zimbabwe. The one thing we do have in common, among other things, is that we both come from Zimbabwe. And that's where the government has just recently rejected a proposal made by mobile telcos to ban or even regulate OTTs like WhatsApp and Viber, which are very popular there. What do you think of this? Minister Supamanduanzira, of course, this Minister of Information, Communication and Technology, as well as courier services, has basically told telcos, well, ain't gonna happen.
I feel this is like deja vu, Andile, because not too long ago, fixed telcos were trying to defend their turf when mobile network operators were trying to enter the market. And now we find the mobile network operators changing seats or changing roles, and they're the ones who are now trying to defend their turf by blocking these OTT services like WhatsApp and Viber.
Oh, how things come around, don't they? Listen, what's crazy is how Minister Manduanzira just flipped the script on these guys. So these guys come basically lobbying government for like, hey, regulate these guys. They're tying into our profits. Soon we're going to have to retrench people. And the government says, oh, thank you so much for bringing this to our attention. Thank you so much. Thank you. I know what we need to do. We need to create a fund, an innovation fund that will allow you guys to develop the kind of innovative startups that can compete with the likes of WeChat and WhatsApp and Viber. And you know who's going to pay for it? You guys will.
And this, it's a fantastic idea. I mean, if we look at the mobile telcos, their messaging service is SMS, and since the implementation of mobile network operators, they have never really developed SMS. It's been overpriced. You still get delayed SMSs. So they have really not worked on any innovation when it comes to their messaging platforms. So I think it's awesome that they've actually decided, okay, we're going to create a fund. Let's build something that's better than WhatsApp and roll it out.
I think it's hilarious, though, that they went to the minister looking for relief, and the minister says, here's your relief. You pay for innovation.
No, I think it's fair because they've reaped the rewards basically. When we look at SMS used to cost so much, and they reaped the rewards when there was no WhatsApp and when there was no Viber. So yeah.
Here's to hoping the next big innovation in the data space, or at least instant messaging space, will come out of Zimbabwe. Well, at this rate, it might just, because of all the money the telcos will be putting towards it. So, yeah, hilarious. I thought that was quite funny. Listen, for our discussion segment, though, this week, we'll be sharing some of the highlights from Nest VC's What's Next FinTech event that went down at the Standard Bank Incubator in Joburg last week. Now, what we're going to do is we're going to play some clips, some audio that we collected from the show, and then we'll unpack them a little. I think a good place to start is by listening to MFS Africa CEO Dare Okuju answering a question we asked him about what incumbents in the financial industry might be doing wrong. The sort of things that are making them ripe for disruption. Here it is.
I think it will be, again, unjustified to throw too much stone at them, because every company, every industry goes through this. 16 years ago, when I started working as a consultant for PwC in Paris, we were saying this about media companies. Yeah, like, they're so old, they haven't transformed, they've been disrupted and so on. Look, 15 years fast forward, media companies has transformed for the better. So I do believe banks and financial institutions can do this journey. It gets to a point in the life of every industry that you get challenged and you have to reinvent your DNA. And I think they're going through that. And some will manage the transition and will get it. And the other ones will die. It's as simple as that. And I think they're quite mindful of it, pretty much all of them.
What would you say to startup founders who might be a tad too bullish about what it actually takes to set up a business that can last centuries like the incumbents have done?
Well, I think it's a journey, right? You need to have the stomach for it, or at least you need to learn to stomach it. And I would say, and we ourselves, I wouldn't say we know everything. We made a lot of mistakes along the way, and we learned from them. And one of the mistakes we made, and if I can give a piece of advice, is around focus. And is around, picking a simple problem and solve it, and solve it better than anyone else. I think it sounds like cliche, but we learned the hard way to focus. And I think if you're going to attack incumbent, if you're going to attack large organization like that, you have to be like laser. That's how it can cut through still, because it's so focused. And if you're going too much direction, and sometimes the journey of entrepreneurship throw you in different direction. I'm not saying be obnoxious. I don't know if that's
obnoxious.
Obnoxious, yes. And you need to obviously reassess where you are every now and then and choose if you're on the right path. But you have no chance if you keep moving, right, left, center, and you can't take them on. But if you focus, if you pick one place that you keep hitting, eventually it falls.
Actually, the advice you're giving is what we're seeing in some of the larger institutions, Standard Bank with their Africa focus, Barclays with their decision. We have no idea what they're doing.
We don't know yet. We'll find out soon.
Well, they're clearly not betting on emerging markets from the looks of it.
Well, but to be fair to them, again, you have to make the distinction of the Barclays in the UK and and the people we deal with here in Africa. I think people we deal here are still going to be around, at least most of them, and they might be called something else. They might be in different form, but the assets are still fantastic. I said the platform they have is still fantastic, and I think they're still. It's a challenge that got thrown at them, and I'm sure they can make something out of it.
And there's Old Mutual as well, unbundling. Haven't told us what they're going to do with their Africa business.
Yes, we don't know. But that one has always been a bit wishy-washy. I mean, there's the thing with EcoBank going on, which we watch closely. EcoBank is an important partner of us. We bank with EcoBank in many countries, and so we watch NetBank through that angle, and the announcement that came out, it's an interesting one. We'll watch it closely. It's actually a bit counterintuitive, right? Of what we were saying, but we might see more of those in the months and years to come.
So, which niches? You're speaking to startup founders now, potential startup founders listening to us right now. Which niches do you think are ripe for disruption, or at least domination? If you were going to pick 1 or 2, 3 niches to start a fintech business, which niches would you pick if you were forced to pick today?
Well, Andile, there is something helps. You follow the money. Where investment been going in the last 2 to 3 years. And it's a lot around e-commerce. I think the whole e-commerce space and simplification, both for merchants and consumers on how they transact online. There is a huge room for improvement and disruption in there, and there's been a lot of investment going in there, which says something about it. The other area is around the POS. I think, again, especially in Africa, I think the whole Square model, the dongle or whatever you want to call it, I think has some legs, and again, we're seeing quite a lot of investment there. And the last one is personal finance. Whether being loans or insurance or savings product simplified in a certain manner, that also has been receiving a lot of attention. Things around unsecured lending. How many people, once you move out of South Africa, you don't have the credit bureaus anymore? Well, there's 1 billion people there to serve. How are you going to serve them? How are you going to lend to those people? How are you going to give them insurance and so on? So the whole area of personal finance, I would say, probably the hardest and probably the one that's going to take longer to come. And there's going to be a lot of blood on the floor in that one. A lot of people will try and fail. But the one that will be able to reinvent and learn and capitalize will actually hit something big, I'm pretty sure.
Now, before we talk about the incumbents within the financial industry and Dare's take on their ability to adapt to a lot of the disruption that's going on, what do you make of some of the areas within FinTech he's excited about? Do you think microlending, microfinance is as big a deal as Dare thinks?
Definitely. I mean, in the African context, it's we have to look at the number of people that are actually unbanked, and those unbanked people are actually becoming unbanked using mobile money, and that is an awesome opportunity to start providing microfinancing. So we have all these people that are coming on board who have never really had access to loans, having the ability to actually get loans through this digital channel.
Thinking off the top of my head, I'd imagine that lending is related to what I'd consider some of the more scary, more unstable elements of global finance, and everything that could potentially go wrong, i.e. bubbles bursting and that kind of thing. What do you think of that? Are the returns in terms of the interest charged at a sort of microloans level sufficient to cover the risks involved?
I would think so, because lending through these new channels like mobile money make it possible for someone to actually have a track record. So how much someone maybe is actually putting into their phone over a space of 6 months or a year, and you can actually do trend analysis on that. And then you can also know that that person might actually be encouraged to finance or to actually pay back that loan, because no one wants to get rid of their cell phone or cell phone number that they've had for many years. So I would think that the risks are managed, and it's a great opportunity, especially in our African context.
I get it now. Now, coming back to Dare's apparent faith in incumbents within the financial industry to adapt to this disruption, you just described a scenario where I don't immediately think of, say, a Barclays or Standard Chartered, or even in the South African context or the African context, a Standard Bank, or, I don't think of those kind of entities when I think of the innovations you've just described and who's best to respond to that opportunity. Do you really think these guys can survive this new age of opportunity?
I would have to say that most of the financial institutions have been caught with their pants down with all this innovation and disruptive technology. However, there are some that saw this and actually started planning ahead. Specifically, I'll look at Botswana. You'll find that the financial institutions in Botswana have an extensive network of EFT point of sale agents. And that has allowed them to have this wide reach and provide their services to a range of clients without them actually having to walk into their banks. So some actually thought about this and made way, or actually started innovating themselves.
And then in some African nations like Nigeria, for example, where mobile telcos and other would-be fintech disruptors have been told point blank that they will need financial services licenses in order to operate. I suppose the government doing its part to make sure that the industry is protected. How long do you think that sort of legislative protection can be expected to keep them safe?
I think sooner or later, the regulators will finally realize that they are actually holding the country back. because once you start legislating and holding back innovation, you're left behind while the rest of the countries around you are moving forward and they can compete better than you can. I think it's a wrong move on the regulator's part.
And then, of course, what Dare mentioned about improving your chances of success, whether you're a startup or an incumbent, by focusing, by having laser focus in a specific niche. There's something to that, isn't there?
No, definitely, because in our context, there are so many opportunities where the industry is still very young when it comes to the mobile payments. So you'll find that there are so many opportunities that are still out there that are waiting to be taken advantage of.
I suppose the tricky bit, if you're a startup, perhaps less so if you're an incumbent, because of all the data you have, or at least legacy data you might have, is determining how profitable, potentially profitable a niche is, and whether to go for it or not, you know?
One of the interesting areas that I've seen in the FinTech space is the aspect of digital money. Because at the end of the day, you find that traditional cash and all these other payments that are traditional, they can't really compete when it comes to the digital space. And so as more services and as more goods are available in the digital world, cash might actually start falling away.
I'm sure the homies in the Bitcoin space are going, yeah.
No, definitely.
Okay, well, our next clip features Geraldine Mitchley, who is Senior Director of Strategic Partnerships and Emerging Payments at Visa. Now, we asked her what Visa's MO is in terms of buying innovation in through startup acquisitions. Now, we know large companies like Visa and others may be challenged to discover and act on innovative ideas, you know, internally, and sometimes might need to bring them in through acquisition. Now, this is what Jerry had to say about that.
So there's not a one-size-fits-all model. We do have quite an active ventures model. You're not necessarily going to see us making acquisitions just to gain footprint or to gain competency, but what you will see is a lot of investment behind the scenes where we see some kind of innovation or disruptive technology that's enabling something that we see as strategically important for us to invest in. So there's a couple of examples we can cite. For example, LoopPay, where we got them kind of on the path to enabling their technology for a global interoperable way because of the clever enablement that they were facilitating, and got behind them in terms of venture, which then subsequently put them in a great position for them to sell themselves onto Samsung. So that's an example of really our philosophy around investment, is looking at backing companies and innovation that is going to be accelerating something that is strategically important to us.
So you wouldn't necessarily be looking to acquire promising fintech startups, you know, in the fear of being left behind, as it were?
Look, I did say it's not necessarily a one-size-fits-all. If there was some kind of acceleration, business rationale behind that, it's definitely a possibility. So it's not a definite no, it's not a definite yes, but we're not just in the sake of acquiring for the sake of, just bolting on some utility. We would rather walk a path together with a company through an investment approach.
Well, Jerry's comments definitely pointing towards a rather conservative approach towards acquiring startups or buying in innovation, as it were, at least at Visa.
We have to realize that there's a lot of risk when it comes to new startups and these new technologies. So I can understand her view or Visa's view of walking through with the startup. Then as they go, they can see how the technology or how the idea is actually developing. If they want to cut their ties, then they cut their ties before they have actually sunk in too much money.
The thing is, though, I suppose if you think about innovation in its very nature, in its rawest form, you look at an Uber who no doubt approached many VC interests trying to sell them on this this futuristic, and perhaps at the time they were pitching it, pretty unrealistic take on what the world might look like in terms of the shared economy. A world that maybe, I'm not saying he pitched Visa or they pitched Visa early on, but may have done. And at Visa looking at their current model, their legacy business, going, oh, there's no room for this. Even if you are onto something new, there's no room for it. I have no doubt they would look back on that and go, hey, that was something we might have wanted to jump on very early on. In some respect, I think companies need to be open to rolling the dice on startups and trying to imagine a future that doesn't mirror anything they've ever had to deal with before.
Yeah, Geraldine mentioned that they do focus on their on what is strategically important to them. So from company to company, we see that they have different strategies and they have different goals and objectives. So you, as a entrepreneur, you would have to go around and find the right partner who will work with you.
That's a brilliant segue into our next clip. A gentleman named Sechaba Ngwenya is the founder of a FinTech startup called Creditable, and his company is enjoying a season of respite after 5 years of serious toil. Now, this is his take on playing nice with incumbent financial institutions in order to further his company's objectives. He's finally gotten in with some key banks in Hong Kong. Take a listen.
What we do is that we turn companies into banks for their employees. And the reason we exist is because blue-collar workers don't have access to banking services. Yes, they have bank accounts, but the bank accounts do very, very little to uplift them.
I know that in a world that allowed startups to have banking licenses, you'd have long had one by now, but you have to play nice with incumbents that have run the system for a while now. Tell me a little bit about that struggle and where the angst lies for you.
All right. I want to say there isn't a lot of banks. There's a great opportunity to change banks from within, especially the smaller banks, the tier 3 banks, who have a lot more to gain. We're playing nice with them, obviously because we don't have our own banking license, but they're also playing nice with us to catch up to the big incumbents who may not have recognized these opportunities.
Now, for those of you who actually missed the What's Next FinTech event, you really did miss out on some of the very candid commentary that Sechaba had to say about trying to interest incumbents on some of the innovation his company and others are bringing to the table. And congratulations to him, because he's managed to get the nod from DBS Bank in Hong Kong. They're running an extended trial with them. He sold them on the potential of his company's innovation to deliver value. Now, as you know, like he mentioned, DBS being a tier 3 bank in the context of banking in Hong Kong and indeed in Asia and around the world. Certainly not a large bank, but certainly a bank that knows well and good that if they're going to be part of the future, they're going to need the kind of innovation that Sechaba and his company can deliver. What do you make of his comments, Nzgui?
Firstly, I want to say that it's encouraging to see a local entrepreneur, a local innovator, creating a solution, then not having success locally, but finding success somewhere else in the world where this bank, DBS, is actually seeing potential in his solution. So keep at it, Sechaba.
What does it say about the banking fraternity on the continent that Sechaba no doubt trotted his ideas out to and gave him a cold shoulder?
What can we say? I mean, many have gone through the same experience as Sechaba, I'm sure, and they can testify that it's not easy because these are international banks. These are banks that have been running for a very long time. They are settled in, and they have this market, and they are comfortable. So it's very hard to come in and sell your idea, and for them to actually take it up and run with it.
Well, we're holding thumbs for Sechaba and his team at Creditable. Over the next 3 months, his fate, their fate will be sealed because, of course, they've been running with DBS for the past 3 months, and in another 3 months, they'll be making an assessment as to whether there's actual value delivered by the innovations they provide, and then determine whether or not DBS will be a partner going forward. So we'll be looking out for them and wishing them all the best. Now, finally, we asked Technology and Product Director at FinTech startup Yoko, Lungisam Choba, and the founder and head of product at Giraffe, Shafin and Washa, to tell us two things. Firstly, in hindsight, the one thing they would have done less of as they built their companies up to what we see today, relatively successful startups, and things that in retrospect they would have done a lot more of. So here's the clip. Lungi goes first, and then Shafin factors in later.
So I think I'll start with the thing we would have done more of. If I look back on our history as a company, one of the things that served us really well at the start when we sort of found the organization was we were super optimistic about everything we could do. Which meant that we looked at the space and we were like, we can do that. We can get in there. It's so easy to get in there. Let's go. And I think over time, you get into a bit of a reality phase where you start to realize, okay, wait, no, there may be certain things you can't do. And we're now going back to a more positive space where it's like, no, let's keep pushing. Let's make sure we're constantly, have that sense of like, we can achieve anything. And I think that's probably the thing that I want to do more of, because at the start, that was the most powerful thing. We wouldn't have been able to even launch the business if we weren't living in that sort of optimistic place where you feel like you can do anything. So it's probably the most powerful thing.
And the thing you'd have done less of or avoided entirely?
So in terms of the thing I would have avoided entirely, I think especially at the start when we set off, we spent too much time trying to raise investment capital from people who would not give us capital. So one of the things we went around and we saw so many different people, and we hadn't yet learned how to filter out who's going to give you money and who's not. And I think, to be honest, one of the biggest filters that we learned was have a look at their history. You're not going to be the first of anything. Every now and then you have a company be the first, but if they've never invested in a company like yours, there's a big risk they're not going to do it. So we wasted a lot of time speaking to funds that hadn't invested in Africa and weren't interested necessarily in investing. Speaking to local investors that hasn't taken the kind of risk that we were needing them to take, given what we needed to raise and what we needed to do. So we really had to realize that, look, filter them out very quickly. Don't engage in overly long conversations with people who aren't going to get there. Why? You need to see a lot of people to raise capital. So have a very strong filtration process. You revisit them in later rounds, but move on.
All right. Well, and your two? Something you do more of and something you cut out completely or not do anymore?
So funny enough, in terms of cut off, it's pretty much the exact same thing. Investment in Africa, in South Africa, the ecosystem is extremely young, right? And to your point earlier, because there's so much limited capital, they only look at two metrics, revenue and, fine, user acquisition is relevant, but revenue and revenue growth. And there's so many of these conversations we've had, and for us, when we were testing this concept, we told them, we're not actually monetizing yet. And this was just something that a lot of the South African investors simply couldn't fathom. And, we would have like lengthy discussions with them over 3-month periods, only to realize, actually, seriously, because you guys aren't generating revenue yet, maybe you're a bit too early stage, and, we should conclude these discussions now. Like, hey, why did you entertain these discussions for 3 months, So, yes, definitely stop wasting your time on useless investors. And especially at the beginning, if you're not monetizing and you're bootstrapping and you're still trying to prove the concept, put your head down and focus on that. That's the most important thing. And then do more of, I think it's just, and now I can easily say this because we're in a more optimistic time with our business, having just closed a seed round, which we haven't announced yet, which will be announced at some point, and having won this competition with $500,000 in equity funding, so we're a lot more optimistic. But throughout this journey, there was a lot of low points, right? We compare ourselves against Silicon Valley investors that have raised $8 million, $10 million in Series A and even in seed rounds much higher than us, and we were like, what are we doing? Is this market big enough? Is this something that will get adopted? And there are bad days and there are good days, and sometimes especially when you're bootstrapping and you haven't got that sort of validation from investors, it's tough to stay optimistic. But I think there was an interesting article by Paul Grimm, and it was basically don't die, right? And it was an interesting article, and all he said was, as a startup, for you to survive, all you need to do is you shouldn't die, and you need to do whatever you can to prevent that from happening. And it's all about staying optimistic and staying positive, and focusing on the business, focusing on your customer, focusing on your product, and eventually the metrics will turn up.
I like that parting shot from Shafin. Don't die. Focus on your focus.
No, definitely. That's important, Focus.
A lot of people focus and still die. So that's a tricky thing about being a startup, though.
Oh yeah. It's always a risk, but sometimes it's worth it at the end of the day. So it's better to always try.
That's true. But the one thing they both said that was interesting is don't waste time with these dud investors, man. Move on really quickly. Work out very quickly if people are interested. And also don't approach people who haven't had who don't have a track record of investing in African startups. Just move on. Don't even get caught up in trying to impress people who just aren't interested or can't be persuaded.
Yeah, it's easier said than done, Andile, because when you're desperate and you really need that funding, you're going to listen to anybody and you're going to give time to anybody who seems as a potential. So it's easier said than done.
But there's that Silicon Valley tendency towards spending insane amounts of time and energy trying to get investment to extend a runway, as opposed to actually improving your product, actually making sure it works. We were just talking off mic about the fact that perhaps if M4 Jam had launched in China, where WeChat is huge, they might have secured the types of volumes that would have rendered their model sustainable, as opposed to maybe be here and knock on the doors of places like Naspers and say, listen, look how great we are, got the money, but ultimately failed.
Yeah, I mean, it's definitely important to always be focusing on your concept.
And then, of course, there is plenty to be said for staying positive and not dying. So we won't knock that. Here's to all the startups out there, FinTech and otherwise. Don't die, my friends. Don't die.
Oh, yeah. And self-belief. Self-belief is so important. I mean, you always have to be believing in your dream. That's going to keep you going when the times are tough.
Well, there we have it. Pretty much a decent snapshot of the time we spent at the What's Next FinTech. If you didn't make it out, please do not miss the next one. I can't say when that will be, but hopefully we'll work something out with our friends over at Nest VC. A big thank you, of course, to all the partners involved, MyPhone, Standard Bank and the incubator, the good team at iAfrican.com, as well, of course, as a big thank you to our very own team right here at the African Tech Roundup. And, of course, thank you to you, Nzgui, for factoring your 2 cents. You better not miss the next one, otherwise we'll take it personal.
No, thanks a lot, Andile. This has been quite an adventure.
For sure. And of course, listen, you're probably wondering, where can we listen to the full conversations? Because we've just played snippets on the show. Have no fear, my friends. We will be releasing the extended conversations we had with each of the individuals we featured in this week's show in the coming weeks. Some of them were, 15, 20 minutes long, some shorter, but all of them highly insightful and worth a listen. What I suggest you do is subscribe for the newsletter that gets the podcast in straight to your inbox every Monday morning. You can do that by going straight to africantechroundup.com, or you can find us on SoundCloud at soundcloud.com/African Tech Roundup. Subscribe to us there, and as soon as any of these interviews come online, you will definitely get a notice straight to your smartphone and do it there. Of course, if you're already following us on social, you know where it's at African Roundup on Instagram and Twitter, and on Facebook, we are facebook.com/African Tech Roundup. Updates on any new content posted there. Follow us there so that you don't miss a thing. Otherwise, once again, today's episode of the African Tech Roundup is brought to you by Audible. They're offering a free audiobook download with a free 30-day trial to give you the opportunity to check out their service. Now, this week, we're recommending something a little different. It's a brilliant John Carney piece written for the Wall Street Journal called FinTech Party May Attract Crashes. Touché, given everything we've discussed today. Now, the title pretty much gives away what he writes about in this article. The only thing that is certain for the global financial industry is that the future is going to happen. The question is, will legacy players continue to dominate, or will disruptive upstarts end up hosting the party? Now, get John Carney's great article or any other audiobook of your choice for free right now at audibletrial.com/African Tech. That's audibletrial.com/African Tech. And that's the week's show, folks. Be sure to listen in again next week. The next episode drops at 9 a.m. Central African Time on africantechroundup.com. Otherwise, again, it's a very big thank you to you, Nzwisi Sachidembo, for joining me on the show. All things being equal, therefore should join me again next week. In the meantime, it's cheers from me, Andile Masu, and of course, Nzwisi Sachidembo.
Remember to focus on your focus.
Indeed you do. Peace out, Africa.